Institute of Actuaries of India. So what is the core practices? First, the core principles, it consists of CS1, CS2, CM1, CM2, CB1, CB2, CB3, and core practices are CP1, CP2, CP3, and specialist principles SP1, SP2, SP4, SP5, SP6, SP7, SP8, SP9. Specialist advanced SA1, SA2, SA3, SA4, SA7. So what are these things? The core principles under that: CS1 means actuarial statistics, CS2 consists of risk modeling and survival analysis. We know there are three types: risk lover, risk averse. CM1 means actuarial mathematics, CM2 means financial engineering and loss reserving, CB1 means business finance, CB2 means business economics, and CB3 means business management. The core practices are actual practice, CP2 modeling practice, and CP3 communication practice. Specialist principle: SP1 health and care, SP2 life insurance, SP4 pension and other benefit, SP5 investment and finance, SP6 financial derivatives, SP7 general insurance reserving and capital modeling, SP8 general insurance pricing, SP9 enterprise risk management. Specialist advanced health and care, life insurance, general insurance, pension and other benefits, investment and finance. So CS1 Actuarial Statistics core principle for 2024. The syllabus includes data analysis, random variable and distribution, statistical inference, regression theory, Bayesian statistics. Under that, the main part, random variable and distribution, is the second part. First part is data analysis, like descriptive, inferential and predictive, suitable tool which are being used. SPS is also one should learn. All using interpreting and making statistical inference using Pearson, Spearman and Kendall measurement of correlation. Random variable and distribution, geometric, binomial, negative, binomial, hypergeometric, Poisson and uniform discrete distribution, normal, log normal, all those type of continuous distribution. Evaluation of probability and quantile associated with this distribution, Poisson process and the connection. Mean, median, variance, moment, cumulant generating function of a random variable, moment calculation, central limit theorem. Statistical inference, bias, efficiency, consistency, asymptotic, bootstrap method, prediction, vector, chi-square test, everything is there. Regression theory, linear regression, the econometrics part obviously. The generalized linear model and understanding, Bayesian statistics, user-based theorem, posterior distribution for a parameter. This is the statistics syllabus. Syllabus which consists of risk modeling and survival analysis and core principles. Direct we come to the syllabus. Fellowship qualification topic in this subject are further built upon SP1, SP7, SP8 and SP9. Same random variable, time series, stochastic process, survival method, machine learning. We can see for risk modeling the properties and everything is required. Time series, again the econometrics part, it's an important topic in econometrics. ADMA model, autoregressive moving average, autoregressive moving average, autoregressive integrated moving average, time series, stochastic process, survival model, everything is there. I am not going into deep for the time being. Parametric test, overall fit, statistical test, machine learning finally. This is for the CS2 syllabus, the whole thing. CM1 Actuarial Mathematics, the core principle, and it includes many things: theory of interest rate, rate of interest, discount of one effective period, annual effective rate of interest or discount, rate of discount at discount payable, force of interest, cash flows equal at each time period, class flow vary with time, equation of value and its application where payment or receipt is certain, uncertain, decrement and multiple life models, whole life assurance, term assurance, pure endowment, the life tables, pricing and reserving, the combination of 1 hour and 45 minutes computer based modeling assignment and a 3 hour and 15 minutes written examination. This is the assessment for CM1 CM1, that is Actuarial Mathematics core principle. CM2, it's financial engineering and loss reserving core principles. So it is including, it will guide one through the actuarial statistics. It is CS1, CS2, CM1, CB2. Subjects that are underpinned by CM2 are further developing the topic of CP1, CP2, CP3. That is actuarial practice, modeling practice, communication practice. The weightage will be on rational economic theory, measurement of investment risk, asset valuation, liability valuation, option theory. Rational economic theory means efficient market hypothesis, consequences for investment management, evidence for or against each form of the efficient market hypothesis, meaning of utility function, non-satiation point, risk aversion, risk neutrality, as I told already, the uncertainty, that part. Perform calculation under the measurement of investment risk, applying a range of financial risk measurement tools to evaluate investment opportunity in the context of utility function, variance of return, downside, all the probability, all those things one needs to the asymmetric information. Basically this part is asset valuation, the assumption of mean variance portfolio theory. When does the best application of mean variance portfolio theory lead to the selection of an optimum portfolio? The mean variance portfolio theory to calculate the expected return and risk of portfolio. Benefits of diversification, mean variance, like we have already understand probability theory, then mean expectation, then variability importance in the risk averse, risk uncertainty, that thing only. Okay, the three type of multi-factors model of asset, and many things are there little bit. Liability evaluations, the probability of ruin in finite and continuous discrete time and state, calculating probability of ruin by simulation, understanding development factor is, and showing how a set of assumed development factor can be used to project the future development. Option theory, like arbitrage, complete market, the international trade part, basically forward contract, lower and upper bound for American and European call and put option, using binomial tree and lattice, underlying principle of Black-Scholes partial differential equation, using the Black-Scholes, and it will be a same combination of 1 hour and 45 minutes computer based modeling as an assignment and a 3 hour and 15 minutes written examination. CB1, subject business finance core principles. So it basically deals with the corporate governance and organization, the regulation of financial reporting, relationship between finance, real resource, objective of an organization, between lender and investor, role and effect of capital market, maximization of shareholder ethical responsibility, how corporates are financed, the characteristics of sole trader, partnership, limited company, different type of loan and share capital, different type of medium term company finance, different type of short term company finance like commercial paper, bill of exchange, treasury bill, we know, principle of personal and corporate taxation, characteristics of the following: the debenture stocks, what are the difference, preference share, euro bond, ordinary share, characteristics and possible use by a non-financial company, method of obtaining a quotation for security, evaluating projects, constructing and interpreting company accounts, and assessment here, it's 3 hour and 15 minutes assessment using objective test question and free form answer questions. This is a basic syllabus for CB1, that is business finance. Business economics core principles. So what is that? Here business economic introduces the core economic principles and how this can be used in a business environment to help inform decision making and behavior. It includes the fundamental concepts of microeconomics, which explain how economic agents make decision and how this decision interact. It also explored the principle underlying macroeconomics. So it consists of economic schools, economic way of thinking, and recent historical application, principle of economic choice, core economic concepts used by business, feature of classical like classical, Marxian, socialism, neoclassical, Keynesian, neo-Keynesian, post-Keynesian, monetarist, Austrian, recent macroeconomic theory. Obviously it starts with the Great Depression and the stock price, the Great Recession, then microeconomics, the main thing which we learn about firms, consumer and market, then elasticity, it's pure economics and microeconomics, the shutdown point in the long run, same thing for the markets, different, perfect, imperfect, competition, macroeconomics and the role of government, social efficient, perfect market, role of taxation and regulation, policy instrument which can be used to promote environmental sustainability, main target of competition policy, growth of international trade, advantages of specialization, balance of payment, the trade part, money part, corporate bond, bank loan, securitization, impact of a rise in money supply, relationship between unemployment and inflation, impact of macroeconomic policies on business, and it will be a 3 hour and 15 minutes assessment using objective test questions and free form answer questions. Business management core principles, and it consists of many subjects linking. The knowledge gained should enable candidates to provide more rounded business related solution when working on later subjects and help them in the development, and it consists of many things. First, starting with the type of skills that must be acquired to become a competent practicing actuary, the aspect of an employing company about which knowledge should be obtained. The student or the individual will be able to understand these aspects on the completion of the course. Staying those aspects of the global economy and politics which have some knowledge should be gained, discussing the issue and challenges faced currently by each main practice area, describing what a strategy is and how it relates to competitive advantage, developing a process for strategic decision making, economic, societal, technological, discussing how to combat competitive forces, discussing a company's structure of decision making, developing an approach to business decision making, discussing the importance of a clear mission statement, importance of a clear business strategy, describing the benefit of teamwork, the advantages of time management, discussing how competition can affect a market, describing and understanding the basic legal principles that are relevant to the work of an actuary, appreciating the source of English law, understanding the requirement for a valid contract, identifying when the courts will imply terms into contract, the concept of a trust and duty of trustee, appreciating the duty imposed on director by statute, common law and equity, stating important characteristics of a profession and its advantages, demonstrating a knowledge of the actuary's code that binds all members, listing the measure by which the Financial Reporting Council and Institute and Faculty of Actuary regulate the activity of actuary and candidates in the UK and overseas, describing the corporate governance structure of the Institute and Faculty of Actuary. This is all about the last course for the Institute of Actuary of India. Best of luck who all are sitting, and I have tried to have an concrete and not an extended, I will tell, but a concrete video on all the topics which are being covered in the actuaries.